Hi, this is Lara at Elliott Wave Gold with your daily analysis for Thursday, 18th of September, recording the video now 4 p.m. Eastern Standard Time. I was expecting a red candlestick for Thursday's session. That's not what we've got. Since last analysis, prices moved sideways and higher for a small fourth wave correction, and it's showing up on the daily chart as a small green candlestick. The wave count's only slightly changed, and we still need at least one more downward movement. I'm still expecting a new low, most likely to end this whole structure for minor wave 3. The target can now be calculated at 3 wave degrees. I expect it should be over within the next 24 hours. The target is 1211 to 1206. I favour the upper edge of that target zone because it's calculated at the lowest wave degree. Let's look at the daily chart. This main wave count expects that primary wave 4 is over here, lasting 54 weeks, almost perfectly in proportion with the 53-week duration of primary 2, and it's the proportion of second and fourth waves which gives an impulse what we call the right look. So this is pretty typical for gold, for its proportions to be remarkably close, so this would have the highest probability compared to the alternate. Primary wave 2 was a deep flat, primary 4 is a shallow triangle, so there's great alternation between them. As primary wave 4 triangle came to an end, and before we saw the breakout of the triangle trend lines, price got quite close to the apex of the triangle. From a traditional technical analysis point of view, when price does that, then the movement following the breakout of the triangle is often more weak and brief than you'd otherwise expect it to be. So if this target is wrong, it's going to be too low. But at this stage I can only calculate the target at primary degree. At 956.97, primary 5 will reach equality in length with primary 1. Primary 3 has a 1.618 Fibonacci ratio to primary 1, so if 1 and 5 reach equality, that would be a very typical Elliott relationship for this 5-wave structure down. But I think this target is actually best calculated at intermediate degree. So when intermediate waves 1 through to 4 within primary 5 are complete, I will then calculate a new target for downward movement for primary 5 to end at intermediate degree. I can't do that until intermediate wave 4 is over. So when we get toward the end of primary 5, this target may very well change, and if it changes, it will be moved upwards. Right now we're looking for the end of a minor degree third wave, and I can now calculate the target for it to end at 3 wave degrees. Within this target zone, at the lower edge of it, at minuet degree, minuet wave 5 will reach 1.618 the length of minuet 3 at 1206. The lower edge of the target zone is calculated at the highest wave degree of all the calculations, so it has the lowest probability, or rather what I mean is if downward movement ends at the upper edge of the target zone, because minuet waves are longer, that would still see a ratio for minuet 5 of 1.618 the length of the third wave. The variation would be less than 10%. We could say there's an acceptable Fibonacci ratio. So I favour the upper edge of the target zone. When minor wave 3 is done, and I think that should be done within the next 24 hours before next analysis, when it's done I'll then be expecting choppy, overlapping, sideways and upwards movement for a fourth wave correction at minor degree to last at least a week and provide alternation with this counterpart second wave correction. Minor wave 2 is a relatively deep 66% correction of minor wave 1, so I'll expect minor 4 would most likely be a 0.236 or more likely 0.382 correction of minor wave 3. So when minor 3 is done, I'll draw a Fibonacci retracement right along its length from its beginning here to wherever it ends, and look for the fourth wave to reach up maybe to the 0.382 Fibonacci ratio. And it can't move into wave 1 price territory above 1280.35. There's a tendency for corrections following fifth wave extensions to reach back up to the end of the second wave within the extension. Here, at the end of minor 3, minute wave 5 is extended, and within that, minuet wave 5 is extended. So we might expect the correction to reach up to the end of the second wave within the last fifth wave extension, so this high on this green candle here. But that would see minor wave 4 a very deep correction, close to the 0.618 Fibonacci ratio of minor 3, and we wouldn't see alternation in depth between minor waves 2 and 4. And I think that tendency for minor waves 2 and 4 to show alternation is probably going to be stronger than the tendency of the correction to be deeper following a fifth wave extension. Let's look at how this last fifth wave is unfolding on the hourly chart, where this high here is this point here. Here we have 1, 2, 3, 4, and we need only the final fifth wave down. I'm adjusting my wave count within this piece of movement. I don't think we have 1, 2, 1, 2, because this piece of movement now looks really clear and obvious as an unfolding flat correction in proportion to this sideways moving combination. So it looks now like this was the second wave, and here we have the fourth wave. And it's probably done. If it is done here, then at 1211, microwave 5 will reach 1.618, the length of microwave 1. And because the upper edge of this target zone is calculated at the lowest wave degree, I will favour the upper edge of the target zone. We only need one final little push down. If micro 4 moves any further sideways or higher, it can't move into wave 1 price territory above 1234.74. So once we see some downward movement, which could be considered microwave 5, after that, subsequent movement above this price point can't be a continuation of the fourth wave correction, and so this whole fifth wave then would have to be over. After we have a bit more downward movement, subsequent upward movement above 1234.74 gives us price indication that minor 3 at all wave degrees is over, and we're in a new upward corrective trend to last at least a week. Also, after we get some downward movement, subsequent movement above this trend channel, above the upper edge of this orange line, provides trend channel confirmation that minor 3 at all wave degrees would be over. At the daily chart level, this is the alternate. It looks at the unlikely possibility primary wave 4 is not over and is going to continue for several more weeks, that the triangle is still continuing, and intermediate wave D is unfolding as an extremely time-consuming double zigzag. For this wave count, we have to see intermediate wave C as a single zigzag, and that has a couple of problems. We're ignoring a rather obvious triangle here, and this minuet degree first wave on the hourly chart really doesn't subdivide as a 5 at all well. It looks much more like a 3-wave structure. If primary wave 4 continues further, it's going to take several weeks still to complete for this idea, and that would see it out of proportion to primary 2. This alternate loses that almost perfect proportion that the main wave count has. And because gold so very commonly does show beautiful proportions at primary and cycle degree, I think the main wave count has a more typical look for gold. For this idea, intermediate D can't move beyond the end of B, below 1180.84 for a contracting triangle. For a barrier triangle, the D wave should end about the same level as B, as long as the BD trend line is essentially flat. What that means in practice is D can move slightly beyond the end of B. So this invalidation point is not black and white. There's some grey area there. That's the only Elliott wave rule which has any grey at all. For this idea, the short-term target is exactly the same. I'm expecting the downward movement to end in the next 24 hours, and then both wave counts expect upward movement. So it's how high that upward movement goes that's going to tell us which wave count is correct. If we see movement above 1280.35, this alternate would be confirmed, and it would be, at that stage, my only wave count. That's all for me today with your gold analysis, and I hope all our members had an awesome day.